Good morning, ladies and gentlemen, and welcome to the ENTEQ UPSTREAM PLC final results for the year ended 31st of March investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Andrew Law, CEO, and David Steele, CFO of ENTEQ UPSTREAM PLC. Good morning, guys.
Good morning.
Good morning. Okay, so we're going to give a presentation on our year-end 31st of March. So go to the next slide, David. So if we start off with a refresher or an overview of ENTEQ, our primary product range is measurement while drilling, and these are sensors, directional sensors that are used in the drilling of every well, and that's oil, gas, and geothermal wells. And in terms of context, the market, the global market for the equipment supply of MWD equipment is approximately 100 million in kind of normal times. In addition to our core business, MWD, we have a Rotary Steerable project which is under development, and that has the potential for game-changing efficiencies, and that market, the Rotary Steerable market, is in the order of 2.2 billion, 1.8 in 2021. And then a point that we are going to propose at the AGM in September is a rename from ENTEQ Upstream to ENTEQ Technologies. That's plural, and that's partly to recognise the two streams that we have, the MWD and then the Rotary Steerable, and then partly to also recognise the kind of alternate energy streams that we have in terms of geothermal and other channels. Okay, so in terms of what we've been doing over the last year, we've had some changes to the board. So same people, but we've had some moves around. So I moved into the CEO role in April this year. Martin Perry moved into the non-exec chairman role at the same time. And behind that, we have a very strong board. And then in addition, we've made some recent hires to our exec leadership team. So we've got the addition of Suki Gill in May, and she's joined us, very, very technically capable, on the chairperson of the International Association of Directional Drillers. And then also we have Neil Bird, who had joined us formally in November and had been working with us as a consultant prior to that. And he's extremely strong in the Rotary Steerable domain, so he's leading the Sabre project. Okay, so a summary of the trading for the financial year. What we saw, we managed to maintain the international business, so that stayed steady during COVID. What we saw in the US, so North America, we saw prior to COVID, the market was already sliding. Then we saw essentially the brakes came on during COVID, and then we saw that recovery. And certainly when I was out in Houston in March, you could really see that starting to recover. And it's been a slow and steady, a steady recovery since. What we've been doing internally, we've had a strong focus on reducing our overheads, which we've achieved. We've achieved a break-even adjusted EBITDA positive, and that's based on COVID-impacted revenue. We've also made the deliberate decision to continue our investment in new technologies, and notably Sabre. So a little bit about ENTEQ in terms of how we're structured. We are a mix of UK and US. So we're headquartered in the UK. We have technology projects that are led out of the UK, but we also have technology projects coming out of the US. We have in-house highly specialized electronics manufacturing, particularly for high temperature electronics. We use a mix of in-house and external partners for some of the technology development projects we have. And for example, our Sabre is being developed in the Cheltenham Gloucester area in the UK, and that, by chance or by design, actually is the Silicon Valley of the global rotary steerable industry. So a lot of expertise, a lot of talent, and a lot of specialized machine shops in that area. In terms of our distribution channels, we have a mix of partners and agents, and also direct sales into our key markets being China, Russia, and Middle East, as well as the US, of course. And then we have key technology partners who we are doing joint technology projects on with. So a bit about trading. Here we see that what I was mentioning before about the slide prior to COVID, the brakes coming on, and then what's interesting is seeing that the rig count is a very sort of controlled rise, certainly compared to the oil price, and that was certainly apparent when I was in Houston. You could see a sort of cautious optimism of adding capacity, but also being very cautious about it. What we saw was that surplus of there was a lot of excess equipment, obviously, in the market when things were slow. In the sort of January this year to March, we started to see that surplus capacity with particular service companies getting absorbed, and that's when there was a requirement for new equipment. Okay, in terms of China, Middle East, and the rest of the world, China has there's been a national focus on drilling for gas, which is certainly positive, and positive for an ESG aspect as well. I mean, we're helping support that drive for cleaner gas in China. It's tight gas, so it tends to be quite high temperature, demanding wells, and that's where ENTEQ's equipment is known for being reliable and resilient in those conditions. So we've had a mix of new customers as well as repeat business from our existing customers in China. Middle East, I mean, what we've seen there is that the Middle East slowed down a little bit later, but the market hasn't yet recovered, certainly to the same extent as the US. In terms of the rest of the world, we've been continuing to support our geothermal customers. So that's been going well. We've had some repeat business there as well. In terms of the market overall, we have in the top right, we have it's BP projections, and this is showing the blue is gas, the blue solid is gas business as usual, the blue dotted is gas accelerated energy transition, and the black is oil. So solid is business as usual, dotted is accelerated energy transition. And the interesting thing we see there is that the gas outlook is in terms of production is as much as today for the foreseeable future, and that's where kind of geosteering, which I'll brief you in a second on that, that's where geosteering kind of comes in terms of maximizing the production for those gas wells. So, and that's where ENTEQ focuses on providing efficient geosteering products that we can deliver. And what that means is, on the left, we have steering and control, measurement, and communication. So steering and control, that means steering the path of the wellbore, and that's where our rotary steerable system comes in. In terms of measurement, that's both directional sensors as well as sensors from the formation, so geological sensors that we can add in. And then communications is communicating with to and from the tools that are 3 kilometers down in the well to surface, and that's the area that ENTEQ operates. So a very exciting project that we have ongoing is the Sabre project, and this is the rotary steerable system. ENTEQ this is a project that ENTEQ has the exclusive license from Shell, and this has the potential to be game changing. This is a rotary steerable without the traditional pads, pistons, which offers some potential significant advantages versus traditional systems. And this is something that Shell had taken through to field trial stage and performed initial field trials. And the principle is same as a hydrofoil or an airplane wing, is directing the flow of the fluid within the drill string when it gets to the bit, directing it so that we can create a pressure differential and then create a side force or a lift. And the other very exciting thing for us is that the market for rotary steerable is 1.8 billion globally at the moment. The market exists and the market is growing. And in particular for ENTEQ, there's a particular requirement from our customers for an independent rotary steerable system. So, something that independent service companies can use. Go to the next slide. So in terms of what ENTEQ, what we've been doing, we took the Shell designs. Shell did a very good job in proving this technology up. And we have a highly specialized team of experienced rotary steerable engineers who have done the re-engineering. And what we have at the moment is we're going through the bench testing phase at the moment. So we have the tool, we are testing it on the bench, and that's in the Cheltenham Gloucester area. And we're then going to move through into the field trial phase. We anticipate commercialization early next calendar year, and we spent 1.4 million to date on this project. So I'll hand over to David for the financials.
Right, thank you, Andrew. Right, as Andrew has already said, that the revenue this year obviously suffered because of the strong COVID headwind in North America. So that's why a dramatic reduction from 10.9 last year to 5.1, but with steady international revenue. The gross profit margin at the bottom has come down a few points, but this is to do with the product mix. We haven't given discounts because we felt when you start discounting, that sets the new normal for our sales price. So we've maintained the price, but the product mix has changed. As Andrew said, the overheads, we've been laser focused on reducing that. So we've taken out nearly $1 million year on year. We've done that by basically removing a complete senior management level in the US. But what we have done is that we've actually spent a bit more bolstering the technical support and the customer support, because we're obviously the customers are absolutely the technical support to our customers, especially the overseas customers and the new customers. It's absolutely vital that we continue to provide the gold standard report. So after that, as Andrew said, we've pleasingly, despite a large reduction in revenue, we've managed to get a small positive adjusted EBITDA. The only other figure I really want to draw your attention to is the next one down, depreciation and amortization. 99% depreciation in the 1.1 figure. The reason why it's come down from the 3.6 is we had a fairly extensive rental fleet at the beginning of the last financial year. We had 17 kits out on rental, and due to the market, because the rental is primarily a North American product. So with the reduction in the North American market, there was a decline in the number of rental kits out there, and we actually ended up with none at the end of the year. And in the year we had only a handful of rentals returned early. And with our rental model, the renter, when they pay the final dollar on the final month's rental, they actually get title. So over the last 3 or 4 years, we must have put at least 50 or 60 kits into the market to maintain our market presence and effectively grow our market size. So moving on now to the balance sheet. Right at the top, the intangible assets, so 1.7, of which 1.4 is the Sabre technology, because obviously we're capitalizing all the costs on this project until we get to the commercialization phase. We still got our facility at South Houston, which we're holding in the books at 2.1. The next figure is I'd like to draw your attention to is trade receivables. It has gone up a little bit despite the reduction in the revenue. Now, the first point is we have had no bad debts. We have a very good quality of customer base and no bad debts in that year we're particularly proud of. But what we've had to do is obviously our customers' cash flow has come under pressure along with ours. So what we've had to do is talk to our customers at a very early stage where they've run into cash flow difficulties, and basically we've extended the repayment terms or come up with a new extended payment plan. So that's why the trade receivables have gone up. Inventory, next line down, around about 3 million. You'd say, that's quite a chunky figure for a turnover of 5 million. But what we have done, we've tended to keep around about the 3 million because, again, what we want to do is be extremely responsive to customer demand. So if a customer rings up today, we can almost deliver a full MWD kit tomorrow. And that's another competitive advantage. And obviously we can do that because of the strength of our balance sheet, which is underpinned by the 8.1 million of cash right at the bottom at the end of the year. So obviously a reduction during the year, but we'll come on to the cash flow. But the 8.1 is more than sufficient to complete the Sabre project. Put an initial Sabre rental fleet, which is most probably the business model we'll be following for our Rotary Steerable project, and we'll also keep a sufficient cash buffer even after we've got the Sabre project launched and a rental fleet in action. Right, so the last financial slide is the cash flow. So we've talked about the top couple of lines. So obviously, just about break-even adjusted EBITDA. The debt is going up. Obviously, that's absorbed some of the cash, but the key cash absorption has actually been in the 1.6, the R&D, which is an investment in the future, primarily Sabre. But we have other engineering projects which will hopefully deliver exciting new products into our range in the future. So just to reiterate, 8.1 more than sufficient to complete the Sabre project and still give us a sufficient buffer to run the business. This stage, I'll hand back to Andrew.
Yeah. So in summary, we see the short-term and the long-term market is there. It's positive. We see, even with the energy transition, that gas is important. I mean, gas production will be vital to making the energy transition happen. And therefore, our focus is on making sure we deliver technologies that can support that and support efficient gas production. So with Sabre, I mean, Sabre has the potential to completely eclipse what we've done before, and this is something that we're very excited about. We've been running very close cooperation with the team in the Cheltenham Gloucester area. We're going down there very soon to go and revisit it, and therefore it's our priority is making sure that it gets to commercialization and that we have a healthy balance sheet to enable that, and by all the indicators we're on track. So in addition to that, we have a sort of with the market starting to recover, we have a sort of reinvigorated sales team, and we have the focus on some market-led technology development without being distracted from Sabre, and then not something we're looking at the moment, but we're always open to and keeping an eye open for when the time is right, which isn't now, but when the time is right for any other strategic partnerships that we may have. So that's the conclusion, and we can now go to Q&A.
Fantastic. Thank you so much, Andrew. David, thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. But just while the team take a few moments to review those investor questions submitted already, I'd like to remind you that the recording of the presentation, along with a copy of the slides and the published Q&A, could be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Andrew, David, as you can see, investors have submitted a number of questions during the presentation today. If I may, if I could just hand back to you, and where appropriate to do so, you could just read out the question and respond just by clicking on that Q&A tab and starting at the top. Thank you.
Right, Andrew, shall I take the first one?
Oh, yes.
Right. The first question, I noted that the company incurred aborted transaction costs of some $100,000. Is the company in a position to provide some elaboration on these transaction costs? What kind of target was identified? This was the kind of spillover from the potential an aborted acquisition we were looking at in the March 2020 year. So as Andrew said, we're always keeping an eye out for interesting technologies. We tend to partner, but obviously if we're partnering with a technology, we get to know this technology company very well. And if we're suitably excited by that technology and it's complementary or accretive, then we will certainly, look and do more than kick the tires. So that's what we did in the year to March 2020, and the 100,000 was basically just a spillover of the of that aborted transaction this year. We still remain friends with these guys. We couldn't quite get the deal done, but we're still very interested in their technology, and we're still collaborating closely with them.
Okay, I will read out the top question, and then I think probably best for David to answer this one. So this is: how much more investment do you expect will be required to complete the Sabre product and bring it to market?
Right. Well, obviously there's quite a lot of commercial sensitivity around this particular figure, but what I can say is that the market figures out there, which has this kind of a 6 million revenue this coming year. It has the cash at the end of March 2022 of just over 3 million. So, out of that, now that's obviously a hell of a reduction from 5 to 3. But an element of that will be completing this project. But a big slug of that will also be, as I said, setting up a rental fleet, because that's the way we feel the market is best to penetrate the market. So can't be too specific, but I can just reassure everybody on this call that we do have sufficient resources to carry that through.
Okay. The next question I've seen is, what's the path to returning revenues seen in 2015? And could that be delivered from the current lowered 2.6 million cost base? The simple answer is new technologies, in particular Sabre, and then any follow-on technologies is the path to returning to those revenues. Next question is: great to see the company is opening up towards ESG and is already providing equipment to the geothermal industry. Is there any indication of the size of the geothermal drilling industry available, which ENTEQ can target? I would say that our customers, we support customers at drilling services companies who operate in the geothermal market. It is an important market because we can provide highly reliable tools in a very high temperature and high vibration, just because of the nature of the drilling. So in terms of the market, it is significantly smaller than the oil and gas market. So it's the well count is a lot smaller. So it's but actually, if we look at ENTEQ's mix of customers, our what we've provided to the market is kind of disproportionate in our geothermal element is disproportionately large compared to the rest of the market. So the next question I see is, how do you see the Sabre product coming to market from a distribution point of view? And what's the business model for Sabre and the expected margin? So distribution, we've got a number of plans for the channels for distribution, both direct and through partners, and that depends on which country we're going to be and which region we're going to be operating in. So we've been working through that. What's the business model? So the business model, very good question. The good thing is that the rotary steerable market is already set. So there, it's made for us to then enter, and therefore it's primarily going to be a rental and a supported rental project or business model. So we would rent the equipment, and then there's a sort of stream of repair and maintenance and consumables that goes alongside that. In terms of the margin, probably a bit commercially sensitive at the moment. What we can say is that we've designed the tool to have enough margin for both to be able to create enough value for ENTEQ, our customers, and the end operator, which is what we're about. So next question I see is, many thanks for the update on the RSS, really appreciate it. I understand the RSS is currently in the phase of bench and lab testing. Are those tests progressing according to plan? In other words, no negative findings on the RSS tool yet. That's a fair assessment. I mean, yes, I think we are going as per plan. Can the company provide an indication on when they expect to move into field trials with the rotary steerable system, and perhaps share some thoughts on the expected success rate of those field trials? So clearly, with any technology, there is technology risk. Like if I refer to my previous answer, we're confident with the way we are on progress and on track. We are at, I'd say, a good level of advanced stage of negotiation with field trial partners. So we'll give an update as soon as we can, and once that's secured.
So I take the next one?
Yeah.
Right, I observed that working capital increased this year despite a reduction in revenues. When revenues pick up again, do you expect that working capital will increase further? Now, there's kind of two aspects to that. For the Sabre product, as that comes into commercialization, as Andrew said, that will be a rental model. So hopefully, there won't be a working capital aspect of that, because we'll just recognize the rent in the month that they pay us for it. When it comes to the our MWD stream, that is very much dependent on, obviously, the sources of finance available to our customers. And we have used our very strong balance sheet to effectively finance quite a few of our deals in the past. It's not what we want to do, but where needs must, we have done so. It would be selective, shall we say, obviously what we do as the market picks up. And what we've found is with the equipment overhang, MWD equipment overhang going, there's actually becoming a shortage of the key components of the MWD system, primarily the directional module and some of the sensors. So, we have stuff on, we have these items on the shelf. So I don't think there will be obviously an element of working capital creep, but not dramatically.
Okay, next question I see is why did Shell out-license Sabre? They were evidently making good progress on a project that might have given them a competitive advantage in their core business. So I can answer with what I think Shell did. I mean, that's the caveat, is if I can give my opinion there rather than giving Shell's sort of direct answer. But I would safely say that Shell's core business is not in the production of particular technologies and bringing those to market, and I think that's possibly one of the reasons that they selected ENTEQ, and they selected ENTEQ to develop this project, is that we're independent. And so rather than give it to one of, or offer this to one of the sort of more dominant oil field service companies, it was seen as an opportunity to help a UK company and an independent UK company bring something to market. So that's my assumption on why they did that. So have you ruled out M&A? It sounds as though your cash is earmarked for Sabre development and the initial fleet plus working capital. So absolutely right, our cash is earmarked for Sabre development and initial fleet plus working capital. I haven't ruled out M&A. I think it's when the time is right, and so we don't want to distract ourselves from our core business. We're very excited by the Sabre. We're very pleased with the progress. That's our priority. But as the time, as things move on, who knows? It may well be the sensible thing to do.
Shall I take the next one, Andrew?
Yeah.
Right, next question. What patent protection do you Shell have over the Sabre technology? So Shell have an extensive list of granted patents over the key fundamentals regarding how the Sabre works. So that is totally locked down, and we have, as Andrew said, we have exclusive rights to use that technology. And again, as you'd expect, where we are, because we've re-engineered this project, we are coming up with refinements to the original Shell patents, and those refinements we are dealing with a London patent attorney to ensure that we have the appropriate protection. So no, we realise that in the future the value of Sabre is the value of the patents and the IP, and we are very, very careful to make sure that we protect everything we can.
Okay. So do you see the US rig market coming back more strongly as companies are able to sell forward at current prices? And do you think it has been held back by companies hedging at much lower prices as per the recent FT article? I can give you my opinion. It's what I've seen, and what when I was in Houston, again, we're going back in on Sunday actually. So I would say that there is a sort of controlled and cautious approach to increasing capacity. It's not a sort of unrestrained growth, and the reasons for that may be multiple. I think one of them may be a bit of caution. The other may be, obviously, the E&P companies are still servicing debt, so it's not flowing through all the way as it would have done, let's say, maybe in prior cycles. So that would be my take on it. I think it's interesting. It's really interesting to see that rig count move up at such a steady pace, and I can only assume that would continue, but not at a sort of uncontrolled, unrestrained pace. But who knows? What are the risks of the Sabre development? And if there are problems, how will your existing technology still deliver market needs? Okay, so I won't go into too much detail on that, but what I would say is we've got a sort of plan for Sabre. We have some in our bench testing. We're happy with the results that we've been doing on the bench testing, so that's going to plan. We have backup plans if needed, as sort of a slightly different way of doing things if we needed to, and yeah, so I think that probably answers the question. What barriers do you expect to Sabre technology introduction, and how are you planning to overcome them? The barriers, it's interesting. There's quite a lot of demand for. So we've been running a steady, structured marketing campaign, and true marketing campaign, not a planned approach. What we've seen is that there's been quite a lot of response from our customer base, both existing and new customers, for this type of technology. So the industry is asking for something like this. So we know that there's a pull from the customer base. We know there's a need for more reliable rotary steerable systems. We know there's a need for independent rotary steerable systems. Now, as with any technology, it's trying to get it introduced, and that's where we have quite a strong field test plan, and we also have the ability, by nature of our technology, to I guess run it through and get a lot of the early failures out of the way without it affecting the critical path. So the way we can test it is essentially give it a good shakedown offline, but in the well, so we can get a good understanding of how the tool's operating before we move on to the critical path. So there's always going to be things that may pop up, but we've covered what we think are most of the major items. Thank you. I think that is the last question.
Yeah, I was just about to say, Andrew, David, thank you. You're very, very generous with your time. You've actually answered every single question we've had in, so thank you very much indeed. It would be greatly appreciated by the attendees. And if there are any further questions that are submitted, the team will have the opportunity to review those. Andrew, perhaps before we redirect investors to give you some feedback, perhaps I could just ask you for a few final words just to wrap up, please.
No, firstly, thank you for your time. Thank you for listening. Thank you for the very well-informed questions. It's very good to see. It's reassuring to see an interested investor base. All I can do is repeat what it's probably worth me sort of reiterating that last slide, which is, strong. The long and short-term market appears to look good. It's okay, it's cyclical, but it appears to look good for where our products are going to be used. We're pleased with the way that we can do our best. I mean, we are an oil and gas mainly company, but we can help that gas demand and help that accelerate the energy transition. So that's where our technologies will come in. Like I said, paramount for us is making sure that the sabre goes through and making sure that we have a healthy balance sheet to make that happen. And generally, also behind that is making sure that we continue that development of technologies which are there and which we're very excited about, and then keep an eye on the future. So thank you.
That's absolutely fantastic. Andrew, David, thanks again for updating investors today. Please could ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and be greatly valued by the company. On behalf of the management team of ENTEQ UPSTREAM PLC, we'd like to thank you very much for attending today's presentation. That concludes today's session. Thank you very much and good morning.